Hey there, this is Alex Kluge. I'm here from Toronto Home Experts, and I'm here to dive into the June 2023 Toronto real estate market update. Now, anyone who's been following this channel and these videos for the past several months, knows when we're comparing the stats from last year, things are a little bit out of equilibrium, or it's very difficult to compare. But now we're getting into June, and comparing to June 2022, I think is going to give us some really interesting insight in terms of where we are overall in the market, and also compared to last month, where market activity has been increasing fairly significantly over the last few months this spring. Like anyone watching the videos knows that March, April, and May were really strong months for Toronto real estate. So let's dive in to see what's happening this month and what we can tell about what may be happening later on this year. Okay, so sales volume is one of my favorite metrics because it really tells us in terms of the overall health and activity of the market itself. So we're at 7,500 or 7,481 for this past month, which is lower than I would have expected, given the sense that we're actually down 17% from May of this year. So and that that's not abnormal. Like typically you see May listings peak and then June is down slightly, but 17% is a pretty big number. But still at 7,500, we're seeing reasonable sales volume. I mean, I think really the moral of the story is also with inventory, or the lack of inventory, which we're going to get to in a moment. But 7,500, we're probably starting seeing the effects of the rise of interest rates that we've seen on the fixed side, certainly over the last month. And we're recording this mid-July, and the Bank of Canada just raised their overnight lending rate by 0.25%. So now the overnight lending rate is 5%, which hasn't been this high since the early 2000s. So that's a long, long time. And so variable rate mortgages are really getting hit. And only time will tell whether or not we're going to see another increase. There's possibly, depending on some of the economic data that comes out, this summer and fall. But these sharp rises in not only fixed but variable rates is putting the brakes down a little bit in the market. So that's what we're seeing, is that this affects sales volume when mortgage qualification becomes a lot higher with the stress test, and a little bit more challenging with the higher rate environment they're in right now. Okay, so new listings are down 3% from where we were last year. So, again, this is comparing this to a quote unquote normal June. We're still down, pretty significantly over what like a 2019 might be, or 2017. I mean, those are much lower interest rate environments. So you can't really compare those two. But obviously we weren't at the same interest rate levels last June where we are today, but this was kind of a precursor to what to expect. But one thing that's interesting is we actually saw a spike in new listings for the month of June relative to where we were last month. So I think we were up roughly 4.4%. Again, not huge, but it's showing to me that the mortgage rate changes that we've seen over the past, call it 5 weeks, are really starting to play an effect in terms of buyer activity in the marketplace. Okay, so active listings, we are down 12% from last June. And if you remember what happened last June, we really started seeing a rise in active listings and then a decline in sales volume. And so June was really not a great month for the Toronto Real Estate Board in 2022. But, I think it's good that we're seeing a slight decline relative to where we were last year. And what's going to be important to monitor, maybe not so much this summer, because summer real estate stats, you got to take it with a little bit of a grain of salt, because volume tends to decrease. New listings, active listings, all that typically comes down because people are enjoying summer holidays, and traveling is extremely popular now that the pandemic is in the rear view mirror. So real estate activity is going to be slower this July and August, but what we want to see is this in September, October, we want to see active listings be at like a higher level so that, we can actually see a normalized inventory level. So like, obviously with higher rates, some sellers are a lot more reluctant to sell because they're currently on a much lower mortgage rate. So, if they're downsizing, they're going to break that mortgage, or if they're upsizing, they're going to have to port an increase. So, like, there's some logistical challenges with that. So, what I really want to see is like a higher active listings through the fall to really give us like that more of a balance where inventory isn't tight like it's been this past spring. Okay, so average price. Here's where we get super interesting. So for Toronto Real Estate Board, we are up roughly 3% from a year ago, which is sort of what I thought would, we've had a pretty significant jump in prices from December, January. So, we're sort of seeing that leveling off, so to speak, which is what I was hoping to see this June and thought we'd see. And anyone who watched the video last month would remember that. But we're actually technically down 1.2% from where we were last month. So, which is not abnormal, right? Like when you're looking at May stats to June, I want to say at least 80% of the time for the last 20, 22 years that Toronto Real Estate Board has been monitoring that, we see a decline in average price for the month of June. So typically the market peaks in May or April, but typically May. So that's what we saw this year, or what we're seeing now. So what to expect this summer? I'm going to suggest that we're going to see this trend continue, like slight decline in average price. 1-2%. Like it's not a huge number month over month, but and then likely depending on where we are interest rate wise in the fall, we could see average prices kind of stabilize, maybe up a little bit, depending on the outlook for interest rates. Like if the Bank of Canada comes out and said, we're done hiking, we're going to pause, and sentiment is amongst the bond market that fixed rates will come down in the near future, then we may see renewed interest again in real estate. But my sense is we're not quite there. I think we're going to see these elevated interest rate environment for a little bit, likely sometime into 2024. But again, time will tell. I don't have a crystal ball. I don't know where the economic data is going to come into, through the summer and the fall. But that's really what you have to watch closely. Like, what's the inflation data saying? Like, is inflation moving in the right direction? And within that basket of goods, like what is contributing to the year-over-year inflation rate, and how is that being monitored, over that short to even long term. Okay, so average price. So GTA average home price. So as I mentioned, average prices had come down for month over month. But if you look at like the trend, right, like you see like a little bit like that small decline in that graph here on your right hand side, shows that we've got probably peaked this spring. So and I don't want to look at like the 2022 graph because that's really not like the best graph in light of the fact that we had a huge run up in price early in the year and then like a huge rundown in price in Q2. So but you see like basically prices bottom like in December, like I mentioned, and have been climbing pretty steadily since then. So I think further to what I just said, expect that trend to continue, like more flatlining, maybe slight decline, and then depending on where the economic data comes in, we may see another bump or not, depending on where the interest rates are for the fall market, because that's really the next active market is September, October, November. So we're going to want to track that very, very closely. Okay, so here's where it gets interesting. Looking at average home prices year over year. In Toronto, in the 416, we are flat, so completely flat, which is interesting because, we saw some strength in the Toronto real estate market, like 416 specific, this spring. But actually for May to June, Toronto was actually led the decline. So we actually saw a lot of strength in the 905 area. So Durham was particularly strong, York region. We saw average prices increase because, the market doesn't work like straight arrow up or straight arrow down. There's typically moderation levels. So what we saw basically for this spring is that Toronto's really leading the charge, right? Like average prices, there was a lot of weight that was being carried in terms of some of those numbers month over month, that Toronto was really leading the pack relative to the 905 regions. But now we're starting to see Toronto have a little bit of a leveling off, and the charge for the past month has been led by the 905s. Is that trend going to continue? But I don't know. But the 905 has not had the same level of buyer fervor, I would say, relative to the 416 this spring. So could we see the 905, carry on with some strength this summer? Possibly. But I do find it interesting that really, I think, the short term or the spring peak for Toronto was in May, and it was fairly evident in June when we saw those average prices decrease. Okay, so thank you for tuning into this month's video. We're going to do this again for the July and August stats. Those will be fun to look at because, as I said earlier, we're now entering into similar market territory, albeit, mortgage rates are different from where they were a year ago. But, the sentiment in the market, I would say, was fairly similar. So we're really going to dive into those numbers and see what we can glean from them and what we can expect for the fall market, because that's going to be the next test for the Toronto real estate market. Anyways, if you have any questions or any feedback, we love hearing from you. Please tune in to our videos, set the notifications to on, and we look forward to seeing you next month. Thanks again. Bye for now.